Hello guys. So thank you for your comment. Thank you for those that watched the video and those that listened to what I was saying in the video. So I got so many comments, and yes, I want to clarify the misunderstanding about my first video when I talked about the Longwick liquidity and the SNRO liquidity. So some people get it right. So some were still confused about how to spot it. Some need more example, and some we're talking about the background. So I'm here to make a clear explanation and give more example of how the long week liquidity is being used and how you can take it for your own advantage. But first of all, let me give you a clear example of what I mean by the long week liquidity, because if I sell long week liquidity now, you might just assume that every time you see a rejection on the in the market and you see any week, you consider that week as a long week liquidity. It doesn't work like that. But yeah, let me talk about it. Let me go in more details and give you a picture about it. So first of all, let's write it down here. The long week liquidity. Okay, here's it. Let's place it over here. Okay, let's leave it here like this. So let me draw an example of what I mean by long week liquidity now. So I'll use just one example here and we'll go over to the chart and talk about it more. So I don't want the video to be too long. Let's fill it up. Okay, we are using a bearish example for now. Okay, bearish example. Okay, this is it. Let me draw another one. So in this video, you can see both candlestick. They both have a long wick, or they both have a wick. So how do you know the one to use? How do you know which one is valid? So first and foremost, this is not a long wick liquidity. This is just a rejection from the market. This over here is not a long wick liquidity. It's just a rejection. Why do I say it's a rejection? Because the body of the candlestick is longer or bigger than the wick. So this is not a long wick liquidity. When I say long wick liquidity, I mean when the wick of the candlestick is longer than the body. For example, now you can see something like this in the market. This is a pure example of a long wick liquidity. This one, because you can see the whole candles, the whole rejection of the market here. Look at it. This whole zone here is called an imbalance also. So the whole wick of the candle is longer than the body of the candle. So this is an example of a long wick liquidity. And in most cases, here you can spot these things is on the higher time frame, like the 4-hour time frame. Sometimes it does appear on daily time frame, but not very much. But you can see it very well on the 4-hour time frame. So maybe if you want to use it in your own pair, you can go over it and retest it. Always back test. So don't always assume that whatever I said here is going to work on every pair or in every time frame. Always back test. But to clarify the misunderstanding you guys are having, I'm here to talk about this is not a long week liquidity. Put it in mind that every week you've seen in the market is not a long week liquidity. So for you to know a long week liquidity, first of all, you must know that the wick should be longer than the body of the candle. First of all, that is what you should put in mind. The wick should be longer than the body of the candle. That is a long wick liquidity. Always put that in mind. And then again, for you to use the long week liquidity doesn't mean that if I see a long week liquidity in the market, I will just rule out the high or the low wherever it may form of. Then I will just wait for the market to take it out, reject, and then buy or sell off from them. No, that's not what I mean. Like I said in the previous video, if you listen to what I said there are other things you look out for before using this long week liquidity. First thing you look out for is the trend of the market. You have to know the trend of the market. For example, this is an uptrend. This is a simple form of an uptrend. That's what I mean by uptrend. So if we are in a bullish trend here and the market form in this place, let's use this place for example. Let's go with blue. In this part of the market, don't confuse, okay? Just follow every explanation I'm saying. Okay, I'll give you a short example later, but let's look at this one for example. Like I said, before using a long week liquidity, you have to know the trend of the market. Is the market going up or going down? That's what you should know. Then in this example, this market is going up, for example. Then if I want to take a continuous buy in this case, I'll use it. Then I see a rejection like this, a long week liquidity like this. I'll take here as my inducement, which is the liquidity, and wait for the market to come, sweep it, and close above it for confirmation. Always know the market should come, sweep it, and close above that low or that high, regardless of regarding the situation. If it's a buy, if it's a bullish long week liquidity, or is a bearish long week liquidity. So you have to know the market should sweep and close above it. Let me give you an example of what I mean. Let's say the market did something like this. Market should sweep and close above it. Something like this. Yes. Once the market sweep it and close above it, if you are on a tight stop loss, you can put your stop loss maybe. And let me clarify this now. Sorry about my nose. I'm having a symptom of sickness, so I hope it's not. But let's continue. If the market close above this, okay, first we spotted a long week liquidity in a bullish trend, so we'll mark out the inducement, and we have to wait for this confirmation candle. Confirmation candle. And if I spot the liquidity on the 4-hour time frame, my confirmation candle should also be on the 4-hour time frame, because definitely what I'm expecting the market to do here is to come, sweep out the liquidity, and close above it. Like I said in the previous video, the body of the candle should close significant amount of the wick. The body of the candle should close significant amount of the wick. Like this, for example. Like this. You can see there's still a space here in the market. The body of the candle did not close the whole liquidity, but it sweep the liquidity out and close above it. But the body of the candle should close significant space of the candle of this wick here. Like if this candle sweeps like this and return in this form, let's say return in this form, this also the market is creating more liquidity for you. Just know that there will be another candle that will come later on and close above this place to give the confirmation of continuous buy. So even if the market is going up after creating this candle here, market is going up, just know in your mind that the market will come back and close this significant space of the candlestick. So first of all, the confirmation we must know about this liquidity. The long week liquidity is, first of all, always know, for you to verify if that candle's pattern is a long week liquidity. You always know that the wick of the candle should be longer than the body of the candle. First confirmation. Then secondly, when the market, if I spot the liquidity in a 4-hour time frame, my confirmation entry should be on the 4-hour time frame also. That means the market, like right now we are on the 4-hour time frame, and I spot the liquidity here. The confirmation entry which the market should sweep that liquidity. For in this case, we are using a buy scenario, so I would say the low. So let's not get confused, like low is the general thing. So for here is the low. When the market sweep the low of the long week liquidity, the market should close above that low, and the market should close a good amount of the wick of the candle. That is the second thing. And you should also know your trend of the market. Don't just find any long week liquidity. Let's say the market is on a bearish trend and you see a long week liquidity on the buy side, then you take the liquidity and you just want to continue the buy. You will shop SL. That's just it. You will shop SL. So for you to confirm if this is right, like I said, make sure the wick of the candle is longer than the body of the candle. Make sure the time frame you spot the long week liquidity should also be the time frame you make your confirmation entry. And don't be in a hurry to take the buy or the sell, because the market should close above that low and also close a significant amount of with the body, not the wick. Like in this case, let me delete this one off. Okay, let me take this one here. In this case, the market should do something like this. Should close a significant amount of this wick, of this liquidity we are looking at here. You should close it. Then if you want to take your buy, for example, in this case now, you can put your entry here. Okay, this should be a bearish move. Okay, should be a bearish move. Okay, you can put your stop loss at this low the market rejected here. Then at this place here, you can take your entry down to the upside, and for your take profit, we'll talk about that. And there are also many confirmation you should know about. Like I said, know your trend. We cannot do market structure now, but later on I will talk about the market structure, when to take profits, and you have to place your SL correctly. Okay, but in this case, but though this is high risk to put your SL here, is an high risk trade. So the best form is to take your SL, maybe put your entry here, then put your SL at this place, which is the previous low to continue the trend. This is the best form of it. So I hope you're understanding. I hope it's making clear for you. I think I should write it down here. So let's say number one, the week. Okay, let's say must be longer than the let's go number two. Okay, I think number 3 now. Okay, I think this is a bit clearer now. So I will put it up here so you can do a screenshot of it. So I'll put it up here. I can do a screenshot of it. I will need this space later, so I have to put it at the downside of it. So let me delete this one off. Okay, we'll leave it here like this. So I hope you can see the step you need to take. Okay, I think there should be one more step about knowing the trend of the market. I think there should be one more step. Okay, we'll leave it here. I have to delete this one off because to cover the rest of the screen when I want to give a short example. So I have to take it off. So let's say no the market trend. Then I'll put this one here as number 5. Okay, we say use the Longwick liquidity to continue the market trend. So what this number 5 mean here is that use the Longwick liquidity to continue the market trend. Like in this case where I explained that if it's a bullish trend and you spot a Longwick liquidity, you always know that the market will come, sweep out that liquidity, close above it, then you use it as a continuation of the trend. So this is what I mean by this number 5. So know the trend. You also know the trend means you have to know if the market is going on a bullish or a bearish trend. Then the body of the candle that take out the liquidity must cover a good part of the Longwick liquidity. Like I said, the body should cover the good part of it, not just go up above it like this. It's not yet complete. There will be another candle to cover this old space. Like I said, the Longwick liquidity is also an imbalance. So the market is going from liquidity to an imbalance and like that. So let's go over to the let's go over. You can take a screenshot of these conditions because I have to take it out from the view so we can go for a live the market example. So I have to take it out. So now let's go for the market example. For us not to make the video very long, I've already marked out some, so let's go and look for it. This is the first one here. Before we continue, let me draw up this here. If this condition is not met, let's condition. Okay, number 3 condition. If the condition is not met, don't take out the don't take out the trade. If this number 3 condition is not met, if the market close above that zone with a body, that thing is definitely a continuation. Is definitely a continuation. So don't, if this number 3 condition is not met, don't take out that trade. That market will continue in the direction it's going to. What I mean, okay, let me draw this here. So maybe I will be using this the symbol for better example. And okay, let's use it. This is a buy. Let's do it like this. Okay. What I mean by if the condition is not met, I mean something like this. Now this is the sell. Is a sell. Let's say the market does something like this. Right. This was supposed to be our liquidity, right? In the case of buy, so let's know that in the case of buy, and the market closed with a body above this liquidity form, the market there's high chance that the market will continue the form of sell. The market might do something like this, maybe do something like this, maybe try to go up a bit as if it's going up to the buy side, then it will reject with this wick here, then continue selling like this. Let's say the market, this is our Longwick liquidity here, and the market sweep it, took out the liquidity and close with the body. It did not reject this zone and close above it. It closed with the body. Market might come, maybe just go a bit up, for example, then reject this zone and continue. So okay, I think I forgot one more condition here. The condition of here, whatever time frame you spot the Longwick liquidity should be the time frame you make your confirmation. Don't go to a lower time frame to make your confirmation. So let's add it here. We use our number 6 here. Number 6. Okay, I'll use TF. Okay, this TF mean time frame. Okay, so let's not confuse that also. This TF mean time frame. So like I said, the time frame you spot your Longwick liquidity should also be the time frame to take your confirmation. Confirmation I mean here is to sweep the liquidity and close above or below it in the depending on the scenario, if it's a buy or a sell. So this is how it should be. So let me bring out this condition here now, and you can take a look at it and screenshot it. Okay, I think I will copy it and add it to the description of this post. That's what I will do. So let's leave this one aside. I'll add it and leave it to the description of the post. Okay, now let's take a look at what happened here. This is a 4-hour time frame on gold. So let's take a look at here. This is a Longwick liquidity. this is a long liquidity. So you can see here, it's a long liquidity. But I think let's go over the confirmation. Let me remove this one here. As you can see, the wick of the candle is longer than the body of the candlestick. So this is an example of what I mean by long liquidity here in this place. For this example, then now, okay, like I said, this is a buy trend though. This is a buy trend. You can see the inducement taken out here, and the market came down here and create a little higher, low, high, low, then took out the change of character. So after the change of character, you can confirm this is a buy trend here. You can see change of character happen here. So let's put it there. So this is the overall low of the market, which is I do call this an internal low, because there's a swing low and there's an internal low. So this is the trend of the market. Now we'll confirm the market trend is a bullish trend. So let's go over to the confirmation. This is a long liquidity. We already confirmed the wick of the candle is longer than the body of the candle. So now we rule out this low here as the inducement. Look at this low. Now take a look at the low here. Okay. You can zoom close though to confirm if the market sweep it or not, because the market can be crazy sometimes. It might just have just little sweep of it and you might not even notice. Okay, let's go over it now. This is the long liquidity we are looking at here to continue the buy trend. And as you can see, the market came down here and it almost took out the liquidity. Let's zoom it close. You see, this one is still longer than this one. We're talking about this candles, this wick here. Look at it. This one, the liquidity has not yet been swept. So let's position it where. Okay. Always make sure you go your line when to confirm. The liquidity here has not been swept. But now, look what happened. The market rejected at this zone and also came back here with this candle. And now this candle successfully took out the liquidity here. But then the other confirmation the market did not make, that this candle was supposed to close significant part of this liquidity here. Look at it. This candle is supposed to close significant part of the liquidity here. Look at it. What we're expecting is something like this. This is a black. This is black. I was supposed to expect something like this in the market. Okay, this cannot completely open. Also, something like the market should close significant part and reject this zone, but still the market did not. The market rejected this zone and created another long wick liquidity, which is this one here. Now see what happened at the market here. See what happened here. This candle, you can see after the rejection, the market formed a bullish candle here, and maybe you want to enter this candle the market reject this zone and we should buy off this zone. But like I said, that is a trick to create more liquidity in the market. So you have to wait for this liquidity to be swept out, close above it, then before you continue. So in this scenario, the market came back here and did all the confirmation. Sweep it out, close above it, then close significant part of this imbalance here. You can see confirmation, right? The market form this zone here, and if you were to place your, like I said, always know that when placing your stop loss, give the market space. Okay. In this case now, if in this case, if I were to place my stop loss, it will be at this zone. After the rejection here, I'll place my entry at this level, and I'll place my stop loss at this zone. At this zone here, because on the lower time frame, or maybe because you are seeing on the forward, and this low here created a new low before creating this high. So this is a low to continue the trend. So the market did something like this: low, high, low, then come here and create a high. Then this part is the low, then created a high here, then low, then the high. So maybe if you don't understand that part, you can drop your comment on the comment section. I will talk about why this is a low on the higher time frame. So we'll go over it. But look at what the market did. Like I said, all confirmation was met here. In this first case, the market did not sweep out the liquidity. The market just only rejected at that area and went up. Market came back here and sweep out the liquidity and left a significant amount. You can see these are also a long liquidity because the wick of the candle is longer than the body of the candle. So you can see the market came back, sweep out liquidity, close above it, and we had the confirmation of buy. And look at what happened. So in this case of this in this case here, you can also consider this as a long liquidity, but for me, I will not really consider it because the body of the candle is almost like the same or is almost like the same as the wick of the candle. But now look what the market did here, and you can see the move of the market. You spotted a good trade, and for your TP, like I said, since the market is in a buy side, you can target the next high, which is the previous high, like this, as your TP. You can see the entry here and TP here, and you have this is a clear 1:2, almost 1:3. So this is an example of what I mean by long week liquidity. So let's go for another example here. Look what happened in the market. This is another example. First, let's go for this one. Let's use this one first, for example. This is an example of long week liquidity, and look at what happened here. Look at what happened here. The market sweep it out, close above it, but it left a bigger space here. You can see the space here now. You can see there's still very much imbalance here. Let's close this up. You can see there's still very much imbalance here. You can see. So the market did not even close more part of the week. The only part it closed is just only from here to this point. You can see the bigger imbalance here. So if you are to use this one and place your entry here, you will just hit here. Unlike this one, you see the market sweep it out and close most part of the week. Close it up. You can see the only part here is just very small imbalance remaining. But in this case, you can see the bigger you see the huge imbalance still left here. So this is not a trade that you want to trade. This is not a trade that you want to enter. And let's go over to the second long week liquidity here. First of all, look at the confirmation. The wick of the candlestick is bigger than the body of the candlestick. Then look at what happened. As you can see, this is also before this move here. The market is also buying here, so market is also buying here. So you can also take buy here. But in this case, the market closed. You sweep it out, yes, but it closed that zone with the body of the candle, and this becomes invalid, and the market trend continues. This become invalid. This is not a long week liquidity. As you can see, the body of the candlestick is bigger than the wick of the candlestick, so I don't consider that as a long week liquidity. Over here is also a long week liquidity here. Yeah, but we are on a buy side, so you cannot sell off here. And also you can see the body of the candlestick close above the wick, so you cannot take that. Let me find one more example. I think there's one more example at the far back, so let me find one more example. Let's hope it's there. Okay, there's two here. Let's start with this one first. This is a long week liquidity, and let's roll out the zone here. Let's roll out the zone here, and for a confirmation, the market sweep it out and close above it. But now you see the market did not close much of the week, but let's see if the market closed at least 50% of the week. In this case, let's roll it out from here. Okay, yeah, like this. This is what happened in the market. There's still there's still space in this zone here. The market only closed above this place. There's still space in this zone here. But then the market still goes up above it. So, like I said, the market should close a good part of the candlestick. But if we were to go back to this other one, the space there is so big that you don't you might not even tell that the market came down there to sweep out the liquidity. Where is it? I think, yeah. Okay, this one here. You can confirm it yourself and look at what the market left open, look at what the market closed. Just a little bit here. And in this scenario here, although this one is not perfect, but you can also consider it with the risk. So just know there's a risk involved. But if you look at this one here, the market closed a good part of it and left a minor part of it here. So you can also take this one and leave it. So the market is not perfect at this case, but if I had to take this trade, I'll leave the trade. The only reason I'll take this trade is maybe at the top here again later. But this trade, I may leave this trade. But let's go over this one now. This is also a long week liquidity, and we will know that this is a buy side. This is a buy side. No, that this is a buy side. So we always look out for the buy. Now look at it. The market they did sweep here and close with the body, and what happened? The market continue. So this is an example of when not to buy, when not to take the trade. So this also show that we should also confirm that trend, the trend there, or the liquidity without the same time frame we spot that liquidity. So it's good. If we're to go over to the 1 hour time frame now, you see that there's a bit of rejection here, and if you buy at the 1 hour, you will hit SL here because you have to confirm from the 4 hour, and this is what happened in the 4 hour. The market closed with the body of the candle above that zone. So this is not a good form of liquidity, even in this case here. Okay, this case here, the market left a hole. You see the space the market left behind, still too much, so I will not consider this. So I prefer, for your good A setup, the market should come down, close above it, and cover a significant part of the trade to confirm your entry. This also is a long liquidity, but as you can see, the market is in a buy trend, so you don't want to sell here because the market is still in a buy direction, so you don't want to sell here. I think this is one I mark for good here. So let's go over to BTC. I think I also spot some on BTC. Okay. I did spot some on BTC. Like here, this is an example. I think I showed you this example. You can see the wick is longer than the body of the candlestick. So here is it. Sweep. First of all, know the trend. The market is in a set direction. As you can see, it's in a set direction. See, the market create the low here and it's forming the buy here. But in this zone here, the market keep rejecting this zone. And look what happened. It came down here, create a high and a low and a high and a low, and the market broke out the change of character at this place to continue the sell side. So you can confirm a sell at this. You can take a sell here, but the market did not make a bigger sell, but it's still good. Now look what happened in this scenario. The market came up all the way here, closed a significant part. You can see this setup here is so real. You can see the setup here. Close a significant part of the candlestick, and you can take your entry at this level. Your SL, find a zone. We'll talk about the SL later, but then for me, there's no other block here or even a breaker block for me to follow here. Okay, there's an other block here. This is another block. The last candle before a buy scenario. This is another block, but the market already swept it, so I will not really use the other block here. Maybe if I had to take this trade, I'll look for more confirmation, or I will just take the risk that I can. Yeah, place my SL. Like I said, you have to give the market space to move. So if I want to place, even if I had to cover all the way here down here, and at this zone here, take my buy. It's also one issue too, but I cannot leave this bigger ISL. So I have to close a little bit in a zone whereby the market reject. And this is a clear zone here. This zone here, the market did a rejection here. So there is a clear, look at this whole zone here. Let's mark this whole zone out. You can see the rejection from this candle, this candle, this candle reject this zone. The market close above it, make this candle valid. Close above it, make this candle valid. And yeah, this is a zone here, a market. So you can place it here and you still have your one. Oh, this is almost like 1:8. But if I had to make a target here, I will place my total take profit at this level because the market is in the sell side. So I want to take out a new low here. But in a case whereby, like I said, there are times whereby I want to leave the market even when my TP is not yet met. So in a case whereby I'm seeing this pullback here, and I want to leave the market. Reason why is that if I'm taking a trade, I expect the trade to go maybe not in a direct, maybe not in a direct form, but in like this, I want to close the trade. I'll talk about it in another video. The reason why I close some trade, I think is in the list of things I wrote down. So that will be on that video. So let's focus on the Longwick liquidity form we are on right now. But in this case, you are almost at your TP here. And if you are to close around this place, you still be in a good profit. So always know your trend. Always be available to break even because the market can switch side at any time. Now, this is a long wick liquidity here. As you can see, the wick of the candle is longer than the body of the candle. This is it here. And first of all, we will at, like I said, this is also in a sell side. This is also in a sell side. We will at the inducement. Look at it. The market is still on the sell side. You see the trend here. It's still on the sell side. We'll at the inducement. And look how the market did. Took out the inducement. Close below it. Then you can mark out this here and take here as your SA. Since there's a rejection here, take here as your stop loss and tag. In this case, if I were to make any target, I'll target this imbalance here. There's an imbalance here in the market. You see, this space here in the market is an imbalance. The market will surely want to close out this imbalance. So for me, I'll target this imbalance here. So you see, there's 1:4 here at this place. Oh. Always know your trends. We'll talk about more of the trend later on, how to use other block, weaker block for confirmation entry. But in the case, in this case, the SL most times reveal itself because as you can see, there's a rejection. I can put my SL over here and target the next low. You can see I can put my SL over here and target the next low for sell side. I don't think I mark out any example here, but let's look for it. If we don't see, I'll close the video. I'll end the video here. Let's look. Always note when you see a space in the market, the market might not immediately close out this space, but know the market is surely coming to close out this space. This is an imbalance. The market will surely close out this imbalance. So if, like I said, if you have any example, if you have any example, do let us know. Okay, I'm looking at this point. If there's a close, okay, this one, as you can see, there's a body close there, so this one is invalid. There's a body close there. Look at this place. There's a body close, but the market did something and pushed back. So, and even the close of the candle, there is no wick rejection. So this I might turn a blinder of this and lose this trade, but still it doesn't confirm my entry, so I will not take it. So that is just how the market is. Okay, in this case, no, the market did not sweep it out. Let's look for more. If I don't see, I'll close it. Close it here. This is a long liquidity, but the market is on a sell side, so you cannot. It's on the sell side. See, it's pulling out the sell, so you cannot just take it here. Except you spot it in the opposite direction, then you can use it as an inducement and continue the sell. So you cannot take that one here. Let's spot this one. Let's see the trend of the market. The market is still on the buy side first. Market is still on the buy side. It's still on the buy side. This is good, but this is good trade, but the cover of this part is not really good. I think this one is good. This one is good. It took out a close part, but in the trend of the market here, you cannot take out this place because the market is in a sell side at this place. You can see the trend coming down here. So this is the sell side. So it's not advisable to take out this entry here. And okay, let's look at this one. This is a long liquidity here. In case you don't understand what a sell side mean and the buy side mean, please do let me know. So go and spot long liquidity and start taking anyone you see there. Because not all you can take. Like for example, this is a buy side. You can see the push. This is a buy side. So if I spot this long liquidity here, I want to take the added buy because there's a more chance of the market going to the upside than the downside at this point. So let's spot out this one. This is a long liquidity. Let's rule out the scenario. First of all, we spot the long liquidity here. The market close above it after taking out liquidity, and it closed a significant amount. You can see the amount of space the market closed here. Give confirmation. I can place my entry at this level, put my stop loss below this rejection zone here, and target the next up here. This is where my target will be. This is where my target will be. Yeah. Is that I'll place my target here at this level to confirm the change of character, or I'll take it here to create a new high. So these are my target will look like in this case if I do take the continuous buy here. You can also target the whole place. Since this is the last eye of the market, but this will take a long time for it to happen because we are on the 4-hour time frame. You cannot hold trade that long. Just find the closest part you can hold the trade. Yeah, here's the closest. So you still take out 1:2 of this. Still a good trade. So I think I will close here and go back to the explanation I did. So if you have any comments, you can write it out on the comment section and I will review it. So look at it one more time before I'll close this session. If you have any comments or any challenges of where to place your SL, where to place your TP, just let me know in the comment section. I'll do a video about it. And if you're also having trouble with the scenario liquidity we talked about, do let me know. I'll do a video about it. So please don't forget to like and subscribe to my YouTube channel for more tutorial like this. And I will see you guys next time. I think I'm not a bit strong right now, so I will make I'll pick out 2 other liquidity and talk about it on my next video. So see you guys.